Hey, it's a big old pile of money. Welcome to the channel. We're going to be talking about Roth IRAs today. At the end of this, we're also going to give an update on how the accounts are doing. So, let's get into it. So, if you just type in Roth IRA into Google, you'll see tons of different information. And some of it's true, some of it's not. And that's what we're trying to parse out today of what information you can actually take into account. But basically, what is a Roth IRA? So it's an account where you contribute after-tax dollars with no current year tax benefits. You can read it on the screen. What does this even mean? So when you get money from your paycheck, it gets taxed. Everything you get afterwards is called take-home pay. So that's after-tax money. You can contribute as long as you fall under a certain income requirement directly to an account called a Roth IRA. You can take it out tax-free and penalty-free after the age of 59 and a half, as long as it's been open for more than 5 years. So that's all true. It's also true, though, that you can take out the basis, meaning anything that you put in at any time without penalty. The earnings is what that was specifically discussing. So we'll get into a calculator, just like we did before. We'll use a bank rate one this time. All of it should be the same. And going into how much we do on this channel, $25 a week. So for 52 weeks in a year, $1,300 would be the annual amount that we put in. So let's play around with some numbers. As you can see here, we'll take out that and put $1,300 in, starting with 0. It says 29. When do you plan to retire? Age 65. You get just a 7% rate of return. It has the marginal tax rates, which you don't really have to worry about. And then hit calculate. You can see on the blue line how much it's expected to be over that period of time. About $193,000. And so all of that money is tax-free. So you take it out, and it's completely non-taxed. You already paid taxes after. You just have it sit in this account, you don't have to pay. You can play around with some other numbers, maybe change the percentage. You can see how it increases if you happen to get a better rate of return. Early on, consistency in your savings rate is really important. Now if you start with $1,000, you can see that goes up pretty nicely as well. Change the age to 35 instead of 29. It will adjust as well. If you want to adjust how much you put in annually, you can do anything you want to on this calculator. You see $12,000, it says you can only contribute up to $6,500 if you're under the age of 50. $7,500, they say catch-up contribution. Those technically are slightly outdated. The most recent numbers for the current year that this video is out is $7,000 if you're under the age of 50. And so, again, play around with the numbers, but that's essentially what this represents. Opening the account is pretty easy also. If you go to my first video on how to start, it will show you how to do it, and instead of individual brokerage account, you just choose Roth IRA instead. Now again, there's plenty of other things. It talks about, again, the 59 and a half rule. You'll see that all over the place. I wouldn't advise people taking out money that they put into their Roth IRA, but you have access to the basis or whatever you contributed, just not those gains. If you take it out before that time, most of the time you pay a 10% penalty at your marginal tax rate, whatever you're currently being taxed at. But if you go to the IRS website, they have all of these specific rules laid out. I went to the website, looked around. It's just a little difficult to navigate if you're looking for a specific question, but all that information should be in there. But if you're also looking for another source where they lays it out more simply, the MoneyGuys is a great resource. They have a video all about Roth IRAs as well. But let's get into the current progress. So it looks like we're up to almost $300. You You can see the dates in the upper right hand corner, or right in that date range. It's made a little bit of money. It went down at first. And this is just kind of an overview of everything that's happening. So that you can see no extra money's going in. It's just money went in. It went into the money market fund, which is where it kind of sits. If it earns interest, great. And then what we do is eventually buy partial shares of VTI. And so that's what we've been continuing to do. You can see all the way back in the records, $25, $25. Sometimes we'll buy it 50 at a time if it didn't get bought every single week. But we'll search again, VTI, that index ETF. And again, this is just a combination of all the stocks in the US stock market, basically. You can see how much it costs, see all the things about it, and then just hit buy. See this page, as you've seen this channel before, you've seen it many times before. But essentially, just go ahead and click buy. You want to if you have multiple accounts, go ahead and choose which account it's for. But you'll see the funds available on the right hand side. Just type in the ticker number of whatever you want to purchase. And then, since we don't have enough for a full share, what we'll do is switch it to dollars and then type in the amount that we have. We're just going to move all of the money that we have into the account over to the VTI again, preview the order, and then we will submit the order. So that was for a couple weeks. Check back a couple weeks in the future. It's been a little while since I've made a video, but again, the exact same process. VTI, buy it again, going down, and we'll load it up. And this time you'll see, I think you'll see me mess up right here as I start to enter it before I hit dollars. So I do, and then I hit dollars, and then I have to retype it. But again, it's the same thing consistently. Hopefully these videos kind of share as a log as to showing that this can be done essentially by anybody. Please, if you enjoyed the video, consider subscribing, giving it a like. Try it yourself. Hopefully this is something that can be very beneficial to you in your financial journey. And thanks, and I hope you're doing well.